Hey guys, what's up? PipSnipers here, back for another update. This is going to be a Tuesday morning update pre-New York session. Right now, 8:02 a.m. And I'm looking at the move that we had yesterday. So we had a gap up and then a runaway gap. However, there is a possibility that you're going to have retail chasing that momentum, and it's going to increase the risk of a potential snapback in the price. So take a look here at the S&P going all the way back to the bottom of the bear market. Right when Bitcoin bottomed out, we ended up printing bullish divergence here on the 3-day time frame. We had a leading diagonal for your wave 1, come down in a ABC correction for your wave 2. We went on a very explosive wave 3 to the upside, formed a rising wedge, came down for an ABC correction, and then we came out of it in April, and this was the low of the tariff event. That was our wave 4, and then we had a nice melt up for your wave 5. Now with your wave 5, look a little bit closer. You see how we have 5 waves here, and then within this 5th wave, the waves are overlapping like in a diagonal structure. That's showing us that this is an ending diagonal, which usually forms in wave 5s, and you tend to see breakdowns from it, but they can only be confirmed with triple negative divergence on the RSI, because usually when you spot diagonals or rising wedges or patterns in which potentially indicate a squeeze to the downside, it's always important to look at the divergence because they can continue to go higher. So like, let's say for example, like you could interpret this any way. Let's say, for example, this price action didn't happen. Okay. You could have thought that, oh, okay, this is 1, this is 2, this is 3, 4, 5, and then we enter into a correction. But that was only double bearish divergence here. Now you wait for triple, and you see how it's more developed here, and you gapped up to this upper channel resistance. You may see a little bit of a push above it. That's normal, but what I'm thinking over here on the daily is that we had a breakaway gap and then a runaway, and then a runaway gap. But will this be a gap and trap? Will retail be trying to chase this momentum here? And we're slamming into this resistance on the RSI. So yeah, the S&P can definitely go a little bit higher. I can show you the targets for that. All you'd have to do is just take a simple fib right from this high over here back in February down to this low. You see we've come very close to the 1.618. We could go a little bit higher to around 69.59, maybe see even a push above 7K, but when you take a look at it in the grand scheme of things, it does look a little overheated. Take a look here at the monthly time frame on the S&P. This is going all the way back. We can go on the logarithmic scale and check this out. See, this is going all the way back to 1871. You have your 1, 2, 3, 4, 5 in an ending diagonal, or sorry, in a leading diagonal, and then you come down for a wave 2, and then you have your wave 3 to the upside. That would be a wave 1, 2, 3, 4, 5. So this is your 2, this is your 3, then you go into a recession. This was the tech bubble, and then you had the subprime crisis for your wave 4, and then this last leg started when we recovered from the subprime crisis low. So we can dive into this wave count. On this leg, it would be a 1. We'll make it in black so you guys can see a 1, 2, 3, and then over here, that's when Bitcoin topped out, came down for a wave 4, and this lasted about a year, maybe a little over a year. And then this move over here, when we zoom in, is our wave 5 complete. So it does look like we've put in a top here, or at least I'd be looking for a top, because it could go higher. It could go to around 7K, maybe a little bit more, but it looks like these multiple gaps up like this, it looks like retail may be trying to chase that momentum. So it leaves a greater possibility of a snap back down to at least the middle part of the range, sitting back at 67.77, and the lower bounds of the range sitting at 66.73. Okay, so that's the S&P, and we can also take a look at BTC. So now BTC, like I said in yesterday's update, did reject off of the supply zone. We slightly swept the high, swept this external range buy side, and we want to see how today plays out, because the candle that formed yesterday on the daily was a shooting star. Do you guys see this? That was our shooting star. You see how you have a longer wick to the upside here, but then the body is small at the bottom? So whenever you get a candle like that, it's always the next day or the next 2 days that will determine if this is a true signal for a local top or a top, or a false signal. And we have continuation up to around 116, 118 area, around the 618, up to the 786 retracement. Now, take a look here at BTC on the monthly, okay? I know I keep looking at the monthly in all my videos, but it's so important to see how this is developing. And you got a long-legged doji here. So something you have to be very mindful of. Although you may see price rising on the small time frame, it's always good to look at the high time frame as well and see where we're printing the doji. Are we printing the doji at the end of a correction, or are we printing the doji after the price rallied? We're printing the doji after the price rallied. Okay, just like we printed a doji here after the price rallied, just like we printed I believe this is a dark cloud cover, but regardless, it's still a monthly red. And then over here we printed a red doji, and then we had a correction, and then over here. So before every doji or before every red monthly, you always rally into it. We had 2 dojis here in the 2021 top. So it's hard to make a case that BTC is going to go higher. But it's possible, right? It's possible. And I'll tell you guys why. Because when you take a look here at the 2-week time frame, you could have this megaphone pattern on your hands. Okay, we could go for some really crazy manipulation like that and then come back down into the range. That's what I'm thinking. And then this move over here would come to around 130 to 135. But looking at this objectively, what is the price doing here on the 2-week? Just ranging. But they're candles of indecision. Are the candles of indecision at the bottom? Just like they were over here? Or is it at a top? Just like it was over here. So you have to ask yourself that, and it does, considering this MACD and how this RSI looks. So this is the This is the 2-week MACD. Take a look at it on the monthly. Hasn't turned down yet. 2-week is printing bearish divergence. RSI is printing triple negative divergence. And total market cap, crypto total market cap on the 2-week MACD, we're crossing down. We're about to cross down here. The MACD is about to cross below the signal line. And on the monthly, you have that long-legged doji as well. But it's more pronounced than it is on BTC. That's what I've noticed. And is this not the same candle that formed right here in 2021? So we have to be mindful of a potential, the risk of a potential drop going into the end of the year. You know, the market could definitely throw a curveball and then see a new high. But the question is, if we get that new high, will ALTS be able to sustain itself in a rally that doesn't end up getting sold off? That's why we need to take a look at Bitcoin dominance. Now, looking here at Bitcoin dominance, it looks like it's still rising. Okay, I put this chart out for my members yesterday night. And I do think it's going to come back up. Come back up to 60.98%, which is the high of the daily candle after the liquidation event. So on October 11th. And then once you get above that high, we'll likely take out 50% of the wick on October 10th, which was the liquidation event. And that's sitting at 62.06. Okay. Something also interesting that caught my attention is the monthly RSI on Bitcoin dominance. Take a look here. You have a higher low on the price, but a lower low on the monthly RSI, showing hidden bullish divergence. So that leaves us open to the, so it makes it more likely than not that this is an ABC rather than an impulsive move down. It could be an impulsive move down, and this is your A, and this is your B, and then we come down for a C. It's nice to hope, but what is the, what is the chart showing us, right? It's very easy to trade the markets that you want, but they often result in losses. Or you can trade the markets that's being presented in the current day, in the current moment. And what is the chart presenting? Still making higher lows on Bitcoin dominance. Okay, so until these higher lows break, I have to remain bearish on altcoins relative to that of Bitcoin. So let's take a look here at the Russell 2000. So now there's a I put out a video on YouTube maybe a few weeks ago. I think it was 2 to 4 weeks ago. And I put out a scenario in which the Russell is already topped and we're coming down for a wave 2 after breaking down from a rising wedge. Then I put another video out after that showing the bullish scenario on the Russell if the Russell kept going higher. But we have to be really cognizant of what the Russell does here, because there's a big possibility this could be an underside backtest and we come down for a wave 2 rather than a crazy bear market that most are thinking about, like actually going below 1737 like over here, but rather just making a wave 2. And this is an A, B, C, or however this plays out, but there's a possibility of that considering we have bearish divergence on the daily, and it's triple negative divergence, so it's even stronger. So although we may push higher in the short term, this daily negative divergence looms over us. That looms over us, right? Especially over altcoin holders, but more so the monthly candle that's forming on total 3. We can actually take a look at total 3 ES. Let's take a look. Let's delete everything on this chart. Just remove all of this noise. Take a look at it on the monthly. Okay. Doesn't look the greatest. I mean, let's take a look here. The 2 week. At the weekly. Now, actually, you know what? Let's go back to that analysis that I had there. Look here on total 3 ES. This is a rising wedge, okay? In order to negate the possibility that we have a further breakdown, we need to see a move back above these two levels, 837 and 856. Currently, we're holding above the 200-day moving average at 706.59 billion, and crypto bulls or altcoin bulls need the total 3 ES to hold above this 200-day. Okay, if we end up going back below that 200-day, then you need to be very cautious. So we need to, number one, stay above the 200-day, and number two, get above 837 and 885, which is essentially this rising wedge. Okay, look over here. You see? So is this a larger breakdown? Could be. You know, we do have a low that hasn't been swept here. And look where this right leg comes up to. Right at the 786 and 886 retracement. And it took them 6 days to distribute, because this over here is your range. You see? Actually, we'll zoom in over here. They did it on the small time frame here, you see? This was your upthrust after distribution. I called this live in the Discord and I put it on Twitter, and then we had a breakdown, very fierce. I didn't think it would be that deep, to be honest. But considering we did go that deep, it's changed the structure a lot, okay? So we have a lot of resistance to the upside. You need to get back above this rising wedge. Will we do it? Will we do it with a long-legged doji forming on the monthly for BTC? Will we do it with Bitcoin dominance steadily rising back to 61%? Let's see how it plays out, but I'll make sure to keep you guys updated throughout the day. And you know, this is still pre-New York session. The day's not over yet, the week's not over. We still have a lot more analysis to do. If you guys like the content and you want more of this, then click the link in the description below to join the free Telegram. And if you really like the content, then like, share, subscribe, comment. Peace out. Take it easy. See you in the next one.